We're heading into the business end of the trading session, and it's time for Midcap Radar on CNBC TV18. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormuz Fatakia. With me, as always, is Vivek Iyer. Vivek, good afternoon. Some bit of recovery seen in the last few minutes of the trading session, but there are plenty of stocks that are bleeding in today's set.
Absolutely right, Hormaz. Good afternoon. The good part is there's been quite a bit of a sharp recovery, especially as far as the last half hour of the trading session is concerned. And some NBFCs, some autos, they are the ones that are actually seeing a certain amount of recovery. But we have quite a lot lined up on the show. Let's start off with the top headlines. Markets give up morning gains to trade near the day's low. There's been a bit of a recovery in the last half hour. Nifty Sensex trade with 0.5% cut, mid-cap drag, while financial eke out gains.
Brokerage firm Motilal Oswal says that its view on the IT sector has turned cautious in the month of March. Now, all constituents of the Nifty IT index are trading with cuts, and the index has now entered bear market territory. L&T Tech, Persistent, LTI Mindtree, Coforge, all of them are down over 3%.
Ramco Cement and Dalmia Bharat under pressure after Tamil Nadu government imposes rupees 160 rupees per ton royalty on mined limestone. The move is expected to set a precedent for other states.
PB Fintech is under pressure today after its board approved an investment of up to 700 crore rupees in its wholly owned subsidiary, PB Healthcare.
Zydus Life under pressure after it announces an acquisition of Amplitude Surgical, which manufactures knee and hip prostheses. UBS has a sell call on the stock, says the acquisition looks expensive and is likely to be EPS dilutive for the first few years.
Almost 100 points off the lows of the session is the Nifty, heading back towards that 22,450 mark that the bulls have been trying to defend with all their might over the last 3 to 4 trading sessions. So it's some bit of recovery seen on the benchmark indices, at least for the bulls. IT is not lending any support whatsoever. The support, though, is coming from banks, and it is the two large banks, be it HDFC Bank, Kotak Bank, and of course Bajaj Finance, contributing to some of the recovery, as is ITC. But the broader markets, though, are continuing to remain in the red, and the mid-cap index, although recovering from the lows, is still down almost 1%, as is the case with the small-cap index. The small-cap index has been the bigger underperformer in comparison to the two, is down almost 0.3%, also recovering from the lows of the day. But Vamakshi is joining in now to tell us all the movers in the broader markets. Vamakshi, good afternoon.
Good afternoon, Hormaz. The mid-cap index is definitely under a fair bit of pain as of now. And let's look at some of the stocks that are actually contributing to this kind of moves that we're seeing. IndusInd is one such counter. That stock is down nearly 9%. Ramco Cements too, down and out in trade today, down nearly 5%. First Source as well as Godavari Power and Ispat are some other counters that are declining in trade today. We also have a whole host of telecom stocks that are down in trade. Bharti Hexacom is one such name, down nearly 5.8%. Vodafone Idea, Indus Towers are both down over 4%, and HFCL too seeing a cut of 1.5%. Apart from that, IT stocks are taking a very sharp knock in trade today. It is in fact one of the top sectoral losers today. L&T Tech Services, that stock is down nearly 5.4%. Emphasis, Cyient, Oracle Financial all taking a knock in today's trading session, down over 3%. On the flip side, let's look at the stocks that are gaining momentum in trade today. That list includes NLC India, trading close to the day's highest point, up nearly 4.7%. We also have BSE. Keep in mind, BSE has been under significant pressure over the last couple of trading sessions and is finally recovering today, up nearly 5%. But Rampur Chini and GSPL are some other counters that are gaining in an otherwise weak market.
Thank you so much, Vamakshi, for joining us and outlining the stocks that are doing quite well in the session today. Well, moving on, Anupam Rasayan is the first management on the show today. The company recently signed a 10-year letter of intent worth 922 crore rupees with the Korean MNC. They also signed a deal with Elementum Materials to supply advanced solvents for EV batteries. To discuss this, we have Vishal Thakkar, Deputy CFO of Anupam Rasayan, with us. Thank you so much, Vishal, for joining us. We, a lot of news flow that's come in as far as Anupam Rasayan is concerned over the last week or so. We also understand you held a plant visit for the sell-side analyst community, so it's very good to have you on the show. First up, outline the details of the LOI with us. Are you able to disclose the name of the MNC with whom you've done this particular deal, and how will revenue recognition be done over the 10-year period?
Hi, thank you and good afternoon. Thank you for having me on your channel. Yes, I think the recent quarter has been a more buoyant quarter for us, especially in terms of order intake as well as the ramp up that we are seeing in terms of revenue. Let's now talk about the contract, the LOI that we signed recently. This is again a specialty chemical, more on the polymer side, which is going to go into the applications which are more niche in terms of defense and aerospace segment. This is again with a Korean company. Unfortunately, under the CDA, I would not be able to share the name, but it's a good thing is that it's a diversification in terms of geography also. It is coming from a Korean multinational, which is a very large player in this industry. And we will have a 10-year contract here. So every year we will start to have around about an average of 92 crores of revenue from there. It will take, it should start getting commercialized in FY26 and it will ramp up from here on. So all in all, good one on this. On the aluminum side, again, this is a new age battery chemical, especially as an electrolyte, which goes into improving the efficiency and the energy density of the product for the battery, especially in the EV space. So this is a very strong recognition coming from our customers in terms of our ability to give a very high quality new age molecule. So again, that's a very interesting one, and there we see that the validation, the commercialization will happen now, and then the validations will take place, especially of my customers' products as well, and then we will see the ramp up from then on. It's a large volume. It should give us a good traction in the future.
Vishal, good afternoon. Sorry to cut you in, but you'd mentioned you'd start supplying by FY26. If you could be more specific on which quarter do you start doing that, and what does that do to your top line margins in the immediate term? If you could share some numbers on that.
See, I would rather see. I would give you a broad context of how I am seeing the Q4 and then the FY26 as well. We believe that the Q4 should look more robust than the Q3. So I should have a QOQ and YOY decent growth in terms of Q4. FY26, we see that we should be having a good growth coming from there for 26, and our growth journey should be now back on track from what we had seen in the 5 years before the last 2 years, which was the dip. And largely, I would see that would come in from three broad categories. One, agrochem cycle coming back and the volumes coming back, and that's what we've been seeing in Q4, and we see that will continue over the FY26. Also, if you see the pharma is really picking up for us, that would again give me the growth. And polymer, as I was saying, is going to give us additional growth. And to my mind, these three drivers would ensure that for the near term, we should have a strong growth during 26-27 period. And LOIs would be one of the strong contributors to that. Today, it has been contributing around about 20-25% of my revenue. Around 20% of my revenue. And I think this should continue to give me a higher contribution as we go forward.
Right. Vishal, the other thing that analysts have pointed out is the total value of a lot of the LOIs that you have signed are now almost in excess of 10,000 crore, right? Please correct us if it's wrong. So, FY26, you've indicated that revenue visibility is quite strong, and the LOIs that you've signed since 2022, we want to understand what portion of those LOIs you have already started recognizing revenue in. The other thing is, for some of the newer LOIs that have come in, what are the EBITDA margins that you will be operating at, and what will be the working capital cycle that you will also be working at? Eventually, what will be the ROCE that one can enjoy on these products?
Lovely. So let me first talk about the revenue recognition, then I'll talk about the margin, and then I'll talk about the working capital, and then also about my capital employed. Right. So let's talk about the revenue. So the LOIs that I signed in FY 2022. So typically, if you look at any of my process, you should look at an LOI process of 2 plus 2 plus 2. So what do I mean by that? It takes me around 2 years to get from a R&D to an LOI kind of LOI stage. It takes me around about 2 years, give or take 6 months, depending upon the plant availability and the validation. Typically, it takes me 2 years to get to the commercialization, and then another 2 to 3 years to ramp up to the potential that it would typically have. So when I have signed an LOI, which means that I've taken care of the first 2 years. The next 2 years is where we are sitting with the customer and saying where would the larger volumes be coming from, where would the plants be established, and all that stuff will come into play. And that is where, if you see the FY 2022 LOIs, we have commercialized all of them. And FY23, we should be the one that we have signed in FY23 and 24 onwards, we should be commercializing in FY26. So next year, we should have commercialized most of the LOIs that we would have signed. Now, as I was saying, so let's say in 2022, I had signed an LOI worth of 2,600 crores. So if I divide it by 5, I am around about 475, 500 crores of revenue, of which 200 plus revenue has been recognized in this year itself. Now, as we go next year, we should be able to recognize at least double of this, if not more of this. So that's what I'm trying to say. Now, further, if you look at when I say 10,000 crores of LOI, typically you should say that 10,000 divided by 6 or 7 years is an average period. So around about 16 to 1700 crores of revenue should be added on the base revenue that I would have had. So that's what I'm saying, that in next two years time, I should have commercialized most of them or all of them. And then it will be a couple of years to get to the full potential of that.
All right,
Now,
Vishal. Right. If you could quickly summarize this, we are running out of time. So if you could quickly summarize what you meant.
Yeah, on the margin side, see, we are a CSM player, so margins will try and keep it in the band of 26 to 28% typically. Yes, there will be some bit of a buoyancy because of the economies of scale. To working capital, you would see that there will be a far more improved working capital as we go, and even these contracts will have a fairly bit of a more tighter working capital requirement. So that should be adding to us in terms of our working capital efficiency. And the last one on the capital allocation side, all my plants are now fully deployed. So in terms of capex has been completed, and whatever small validation and other stuff are there, which should be completed in next a quarter or two in terms of capex implementation, and then whatever is the time for validation ramp up will come in. So I don't need any more capex. Working capital, it will be more efficient, and hence I think you would see a strong ROC coming from here.
Right, Vishal. Thank you so much for sparing time and joining us. Wish you good luck for the road ahead. The management there of Anupam Rasayan. Take a short break. On the other side, the management of Ola Electric joins in as the company completes the implementation of its network transformation and OPEX reduction. So you won't want to miss that conversation. Stay tuned. We'll be right back. Welcome back, and shifting focus now to Ola Electric. The company says that it has completed the implementation of its network transformation and OPEX reduction program and delivered the cost reduction of 90 crore rupees per month. To discuss this and more, we are being joined by Harish Abichandani, who is the CFO of Ola Electric. Harish, good afternoon. Thank you for joining in. Firstly, congratulations on completing this implementation. And if you could elaborate more on this, that how much would this reflect on your bottom line as well? Would you have given a guidance that your automotive business will be EBITDA positive in the first quarter of FY26? Tell us more on that.
Yeah, Shona, thanks for having me on the show. I think our path to profitability journey began, since quite some time. We have spoken about it in our Q2 and Q3 numbers, and a lot of work can happen in the back. As you see our today's disclosures, a significant rationalization of cost, efficient across multiple processes, whether it is on the front end, whether it is on the operations, etc. All this culminated into a significant cost saving on a structural basis and a steady state basis. This will be reflected in the Q1 numbers, as already mentioned today. So we see the impact coming in quarter one of FY26.
Okay. The other question which we want to ask you, Harish, is that in this press release, you've also indicated that by Q1 FY26, we can see EBITDA break-even in this particular segment. We recall that last time you had joined us, you told us that you would reach EBITDA break-even once you hit the landmark of 50,000 monthly deliveries. So can we expect that by Q1 you will be hitting this particular number, or will the EBITDA break-even be achieved by other means?
Yeah, see, we had discussed this 50,000 number of turnover while we're discussing our Q3 numbers. And that was based on a certain cost structure prevailing then. We always had a path to path profitability, and since then we have actually done significantly more on the cost than even envisaged and planned. So we've done a lot more on the cost side, and I think the goalposts accordingly could shift positively towards profitability much earlier.
Harish, you've also mentioned that your new initiatives have resulted in reducing your average vehicle inventory to 20 from 35. Do you see that number trending down further? And how has demand looked like in this month for the month? We're almost halfway through March. How has demand looked like on ground?
2 points to raise in terms of how the the delivery schedule with the customers. Ideally, one would like to deliver to the customer the scooter in 24 hours. That's the customer's absolutely platinum standard. Now, there are certain processes, there are certain requirements from a local regulation perspective. We have significantly transformed our network design. We have almost eliminated a layer in the network design of the distribution centers, moving inventory much closer to the customer through our stores itself. So hence, this has resulted in this significant reduction in delivery time. This will continue to significantly drop given as the network matures and this process continues to grow. So we see this further coming down from 12 days. And personally speaking, I would want to deliver a customer the scooter the same day. That should be the target. But yeah, this continues to go down. On your question on demand, I mean, you see our Jan and Feb numbers. We have maintained our market share leadership over Jan and Feb. Feb, we are at 28% market share on sales, and March trend is almost similar and if not better as we go into the last 2 weeks of March, given that the subsidies are expected to drop effective April 1. So we see continued customer interest and engagement on our products, significantly momentum going into the last 2 weeks of March.
To deliver a scooter on the same day, Harish, would you want to partner with a quick commerce platform to do that?
Why not? And we have a Ola consumer business which can do it for us.
Absolutely. Harish, the other question which we want to ask, and something that's discussed quite a lot, is the issue of market share. Where does market share stand currently? And aspirationally, FY26, as well as realistically rather, FY26, FY27, how do you see market share trends move?
See, I think the market share is an outcome of multiple things, and one is of course the product portfolio. Our motorcycles are coming. We have spoken about it. We have showcased it. It's on the road. We can test drive it. So the motorcycles are out there. They'll start deliveries will begin end of this month or very early April. So we are on track to significantly expand our product portfolio. And market share is an outcome of continued expansion of distribution and our products on ground. We have reported market share of 28% for February. We continue to see strong momentum going into March also. And with newer products, this will only get better going into the new financial year.
Based on all of this, how do you expect sales to pan out in FY26? Harish, have you set a target for that?
I can't disclose my sales targets for FY26, but yes, as we mentioned, path to profitability is something we will deliver by Q1 of FY26.
Thank you so much, Harish, for joining us. We wish you all the best as you head into FY26. Thanks once again for joining us. Let's now slip into a short break. We'll get him on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Mid-Cap Radar. Well, as you can see on the screen, the Mid-Cap Index continues to slump and it's down a little over 1%. In the last half hour, what's actually seen some selling pressure emerge is the entire FMCG pack. So names like Colgate-Palmolive, Hindustan Unilever, Nestle India and Titan. These are 4 stocks, especially from the FMCG pack today. All of them have witnessed selling pressure, and this selling pressure has actually intensified in the last half hour or so. The other stocks continue to see selling pressure, include the entire mid-cap IT space. And within the mid-cap IT space, in the last half hour, Coforge has hit fresh day's low. Coforge now down almost 4.5% in the session. So again, significant selling pressure as far as the mid-cap IT space is concerned. But with that, it's all the time we have on this edition of Mid-Cap Radar. Your stocks when we return.